Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Malaskis. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to the podcast. I have a very special guest today. I have Amy Salmon with Salmon Insurance Group. Hi, Amy.
Hello, how are you?
I am good, and we're going to be talking about all things insurance related. But before we get there, why don't you tell us a little bit about yourself?
Sure. So, Amy Salmon, Salmon Insurance Group is the agency that I own. I have been doing insurance now for 25 years. So, insert joke about not being old enough to have done it for 25 years. I am a strange person. I'll start out with that because I like insurance. I think insurance is interesting. I think it is challenging. I think it changes all the time. It challenges me and my staff. It keeps us on our toes.
I bet.
We're constantly learning, which is fun. But it is constantly changing, which can be a challenge and is usually a challenge for others. So been doing it for 25 years. Owned my own agency for the last 8. But previous to that, I worked for the same agent for 13 years and stayed on until she retired. And she's now an elected official for the state of Maryland, so that's why she retired. So I worked for the best. I always said that. I was trained by the best. So I really pride myself on how we do things at our agency. I like to keep up on insurance and the trends and what's happening because I think that that's a value to our clients.
Absolutely.
We really like to educate our clients, and I think that that's super important. And I know some people, insurance is not the most exciting thing. They don't love it the way I do, and I understand that.
Yeah.
But I think it's important. Insurance is one of the largest bills that you typically pay in a year. You're protecting the largest assets that you have, your home, your autos.
Yeah.
It's important to know what you have. It's important to know what you're paying all that money for each and every month
Totally
or year.
agree.
Yeah, so we like to educate our clients as much as they want on what they have, what their options are, and really just make them comfortable with the situation. And I think that's the most important thing.
Yeah. So you mentioned that oftentimes insurance covers some of your most important things that you own. It also comes with a price. So let's talk about the price of insurance and how it has, have you heard that insurance has increased?
Hasn't everyone?
So why is that though? What are some of the causes for insurance being more expensive now than say 2, 3, 4, 5 years ago, something like that?
So the last, of course, 5 years have been super volatile with everything, correct? Since, COVID and everything. I will say insurance has been the craziest that I've seen it in 25 years. Yeah. So in my whole career. There's several reasons why insurance costs are inflated right now, and use the word inflated to lead into inflation is one.
Correct.
Inflation has been, record highs in the past years. So that's one. I kind of go back to, what is insurance? Insurance is, the whole premise is everyone takes their money, puts it into a pot, and the people who need it for claims take the money out of the pot. And if there's not enough money in there, then premiums go up. Okay, so that's the way it works.
Right.
So unfortunately, things like severe weather, the wildfires, increases in hurricanes and severe storms, which I say that, and we had a quiet hurricane season this year. Yay, that's great, right. Which is good. So we're hoping to see some relief on the homeowners front. But severe weather, increased costs in labor and materials when you're talking about rebuilding homes. And when we talk about this with people, so the first thing is, so if there's a wildfire or a storm, most people automatically go to homes. Well, that could make homeowners rates go up. Well, when a wildfire comes through or a big storm, it also damages cars. So it's gonna affect auto rates as well. Then we go to, and this is typically what I hear from, clients or people that we talk to. Well, that's not here in Maryland. We don't really have all of that here in Maryland. Well, there is a trickle down effect is kind of what I call it. And that's not the technical term, but it kind of gives you an idea. if there's a huge hurricane or wildfires, all of the shingles, plywood, all of the materials that would be needed to try to repair houses or temporary, when there's a storm, put up plywood and things like that, it's going to go all to that area. Supply and demand. That's going to make costs go up here because all of it's going there, and supply and demand, the way that works. So that's going to raise the material costs.
Yep.
So if someone here has a, say, kitchen fire that would normally cost $40,000 to repair, it's now going to cost $45,000 because all the material went up.
Yep.
Works sort of the same way with labor too. If a lot of people go down when there's a big storm, the temporary laborers go down and things like that, it could drive labor costs up as well. So now, claims are costing 15-20% higher than they were the previous year. Well, all of the carriers have based their rates, the actuaries have looked at what the figures are from the previous years. And now that's got to be adjusted. So that could cause your rates to go up here, even though we haven't had any of that severe weather. Knock on wood, really bad here. So that can happen. So the trickle-down effect from severe weather and different things like that, inflation, all of those things during COVID. We'll talk about COVID. I know it's been 5 years now. It feels,
but it doesn't stop impacting us, right?
No, it doesn't, because during COVID, a lot of carriers, I don't want to use the term jump the gun, but they made over adjusted things, and they were trying to provide relief to their policyholders. So I get that. Yeah. It was a wonderful thing that some of them did by returning premiums and lowering rates because people weren't driving as much when they were quarantined. Yes. However, as soon as everything opened back up again, we saw an increase in claims, fivefold. So what that caused is, now we've lowered rates and we've refunded premiums as the industry as a whole, and now claims are up 25-50%, and we're way off.
Right.
So again, it's a catch-up period then. Now that's subsided a little bit. We're 5 years out now, so everything has kind of gotten back to normal from that. But then we had that, and then the record inflation, and now the increase in the wildfires and the storms and everything. So all of that compounded over the last 5 years has kind of caused, I hate to say perfect storm, no pun intended, but a perfect storm for insurance rates. You look at things like used car prices. Used car prices are up 32% over the last couple of years. So when you total a car that we had estimated it would be $20,000 to replace, now it's now 35% more than that, right? So all of that has caused those rates to go up. Another thing about Maryland, we're here in Maryland, and I'll keep referring to Maryland, but many of the states here in the Mid-Atlantic area, we're some of the highest rates in the country as far as auto insurance is concerned. Maryland, I think we were 6th. We may be 4th in the country right now. I haven't checked in the last couple of months, but we're up there when it comes to auto insurance.
I mean, if you have ever driven on the road in a rainstorm behind anybody who doesn't know what they're doing, it is awful.
Yes.
It's terrible.
Yes. So
that makes sense.
Yeah. So Maryland is one of the highest. It's a perfect storm of all of those things, really.
Yeah. So when someone's talking to you about like coverages and things like that, like what are some of the other things that they should be addressing with you? Like, they don't know what they don't know, so they don't know what to ask. So what other things like should you be asking them about, or should they do their research ahead of time and ask you about when they meet with you, via Zoom or in person?
Yeah, for sure. So every auto or homeowner's policy comes with a base policy. So there's coverages that are built into those that are pretty standard. So with auto, there's liability. There's uninsured motorists, there's your PIP coverage, your personal injury protection. That's all required by the state, so that's all built in. Then there's what's called the optional coverages or endorsements or whatever the term they want to use is. Those are things that you're not required to have. So a lot of people use the term full coverage. I don't love that term because what's it sound like? Everything's fully covered, right? Full coverage, and that's not always.
And
the
not
case.
Everything is fully covered with full coverage.
No, full coverage. I know, right? Full coverage. It's an old term, so full coverage. What that technically means is that you carry comp and collision on your comprehensive and collision on your vehicle. So the comp and collision is full coverage. That means that their collateral is covered for the lien holder. That does not mean that you have rental car. That does not mean that you have towing and labor, or emergency roadside service. That doesn't mean that you have gap coverage or extra replacement coverage on your vehicle. Yeah. Those are all optional things. So That's the reason I don't like the term full coverage, because people assume that it means all of those optional things, that everything is fully covered, and that's not the case. Yeah. It's only comp and collision. So talk to your agent about that. Do I have rental car? What would happen if my car would go in the shop and it takes 2 weeks for it to get repaired? Are you going to be able to get back and forth to work? Are you going to need a replacement vehicle? Are you going to need money to take an Uber or a Lyft? That can be covered under a rental car coverage. So talk to them about those optional coverages on the auto. Do you have AAA or some other sort of emergency roadside service? If you don't, usually you can have that on your auto insurance. Right. Did you purchase gap insurance when you financed the vehicle, purchased it at the dealership? A lot of carriers have something that's comparable to gap insurance. One of the carriers that I write with has where they will replace you 1 year newer with 10,000 less miles on it. A couple extra bucks every 6 months, but it means that would help you cover that gap.
Absolutely.
Yeah, so things like that you don't know about, ask them what coverages am I missing.
Right.
They can go through it just like that. It takes 30 seconds. So you don't have this, you don't have that, you don't have that, and discuss it with you.
Right. Well, Amy, I really appreciate you coming on today. Thanks for joining us.
Thank you.
I think there's a lot of good information, a lot of experience that Amy has to offer. So if there's anything that you think she can help you do, please reach out to her.
Thanks.
All right. Thanks for joining us.
Thanks,
Talk to you
Tim.
soon. Bye.
Thank you.